Good morning, guys. How you guys doing? I got shaken out of Rocket Lab. I actually just closed it at $47. So that's no fun. I was kind of looking to close it right. I lost about an extra buck on it, about 80 cents more than I wanted to. Yeah, there's a few gap downs going on overnight, obviously. I did also close the last of my Oklo. With kind of this much airspace between the 10, I was just trying to use the 5-day. And I was just kind of hopeful that, maybe we could keep ourselves above $120. Really 922's low. And then this morning, I'm looking at it and we're washing all the way out to 105. So I'm still in MP. Yeah, I'm still in MP, but again, I'm not really loving the way this is acting here overnight. A lot of names are just kind of gapping down on me. The one thing I did well was I got myself short on SNDK yesterday against this red to green area, $106. About 105 is where I first took my position. Iron, I dealt with a little bit of headache yesterday, but I effectively have a $48 average, and IONQ as well. I'm in there from mid 74s. So I at least did something well because this morning, my longs are they're all getting hit, whether it's ARC, Tesla, CCJ. This is not the most comfortable. MP getting hit, my PDD hanging in there best, but again, completely unrelated. It's a Chinese equity. Rocket Lab just got stopped out of this thing, so that one is gone. And then Oklo as well. Almost a 25-point gap down at one point overnight. So not really the best feeling. Oil and gas are selling just a little bit. But if you look at crude oil, it's actually hanging in there pretty well. So we'll see. Like I said, the brightest thing I did yesterday was make sure that I put a few shorts on, and that is working out well. Yeah, that's not going to be a thing here pretty soon. Pretty soon you won't have to have 25K in your account to short. Yeah, well, I had to do it in pre-market today. Well, I didn't just yesterday. I've been short MSTR for a few days now. And this one I shorted against the 200 simple moving average on 918. And it was a fairly simple setup, right? You just got right here was a you lost the 200 simple moving average, and it was like right at $354 at the time. And you can kind of look, if I zoom out a little bit, you'll see this like red dashed line here. So this red dashed line is the 200 simple moving average right now, 353.23. Obviously, that's starting to turn down a little bit, but at the time it was about 354. And on the day, what was happening was this thing got right into its 200 simple moving average right here, and then started to break down, and then gave me the 620 setup that I look for, and just rejected the 200 several times, and then broke down. And I shorted this one, and we've had pretty much no headache on it since I got short. So, and that's part of what happens when you're living on a chart that's below the 200 simple. And then I shorted SNDK yesterday. And the reason that I did this one was because MU had gapped down on earnings, and you had just been acting weak, right? Pretty much right from the start. So I was like, okay, well, SNDK is also up, an insane amount. So I was just using this as a extended, position away from the 50 simple moving average to get short. And then you basically had this green to red reject, and that was it. Just basically shorting off of the stock staying red on the day. I also got short iron because they were up about 15% yesterday after this already very extended move. Again, very extended from the 50. And I shorted it really well right in the morning against that $48 level. And I knew that I probably didn't nail the top, although it felt pretty good right from the start. And I was using $50 as my stop. Obviously, it did tap that overnight, but nothing I can really do about it overnight. Just have to sit there, and we're rolling over just a little bit. And IONQ, same deal. You've just had this incredible move. Not really looking to call top on these. Just looking to trade them down for a little bit and see if that will help kind of smooth the equity curve on some of my longs that I'm still holding. I did let go of CCL yesterday, which is now gapping a little bit lower, but effectively on it closing below the 50. Don't really like the way this thing has been moving. In particular, I didn't like how weak RCL has gotten. Plus, this thing has really been a mover for years now, right? About 2.5 years, this thing has been in a really nice uptrend. Well, you basically had a double top, and then you started to live below the 50, then reject the 50, all while the market has been, going up. This thing has been showing some relative weakness lately. So, as that related to my CCL position, I just knew that it was kind of time for me to step aside on that one. Just not really doing anything for the last, 2 months. And I don't really want to have money tied up when you think about it. It put in this high on July 7th, and we've effectively gone nowhere. And now it's September 23rd. So I don't want to be in something for 8 weeks and it not go anywhere. So. Autodesk and IDXX. Autodesk looks pretty good. It's just very slow. IDXX, yeah, not bad. IDEX Laboratories. You just want to see this thing hold the 50 simple moving average. It looks fine, but obviously, for it to be a high type flag, you'd like to see it breaking out. So, and it kind of looks like the market is trying to have a bigger pullback here, which is completely fine. I don't want to think too much of it. We can easily pull back down to the 20-day on the S&P 500. We could even pull down to the 50-day on the S&P 500 and the NASDAQ. And if that's the case, not many names are going to work in that scenario. And I don't really care to trade relative strength while the market is going down. I only care to trade relative strength when the market is going up. Right. So like what's showing relative strength when the market's going down? Those are the names you want to get involved in. Oh, Jesse, heck yeah. Oh, that's amazing. Well, that's made over $5,000. I mean, that's not so modest. Just glad you followed along. Obviously, they didn't make it easy at first. Same thing with Iron. They kind of, they made it a little bit of a pain in the ass, but it worked. SNDK SanDisk, they made that one pretty easy from the start, but at least you got yourself into IONQ. Scott, I just think you need to do more studying, man. I read your comments all the time, because I see that you at me on X and we go back and forth a ton, but a lot of price movement is not nonsense and fake. I just think you just need to do more studying, brother. That's all it really is. Stocks move because they're in good groups, right? That's why they move up. They move up because they're in good groups. They move up because they've got good earnings and sales. They move up because they're in a good group. They move down because they get overextended. They move down because they're in a bad group. It's not all that insane. Moving averages are just there to as a guide. They're not there as as like some definitive line. All they are guides that you can risk off of. They're just guides that, kind of give you the bigger picture of what's going on. That's it. If a market is opening near my stop, would you just let it stop you out or wait a few? I mean, you can wait a few minutes. But for instance, on something like Rocket Lab, I'm not going to wait more, right? If I can get out and there's enough liquidity for me to do so, and it was a small position, but if I wanted my stop to be 47.90, and now I'm looking at it and it's like, okay, I'm waiting. It's below where I, wanted to get out already. And I probably could have gotten out at 6:15 this morning, except I was sleeping. And I'm trying to give it an opportunity. And eventually you just kind of got to kill it. So you can't let some bigger red, or you can't let some red get bigger for no reason at all. Yeah, Jesse. I mentioned it short 3 times because those are the 3 times that I added. Right? I like to add something to something that's working. And once it was working, I just added more and more. And then I just had my firm stop level and then just let it work from there. It was funny because I was using 76 as my stop, and boy, we got close. From there, I'll take it down to a 5-minute chart and use a 620 setup. That's it. We can talk about that some other time, but you should know a 620 setup from Gil Morales. This makes no sense. You're so glad you're a day trader and don't hold. You're forever stuck in the hell of trading. Again, Scott, with respect, you have no clue what you're talking about. And that's just me being nice. What would it take for me to get defensive? Yeah, I think losing the 20-day, like the 10-day being under the 20-day, that would be a start. But here's all that matters to me. And this is what I think a lot of people need to get their minds around. And this is probably what should matter to you too. Are you getting stopped out of your prior longs? Okay, so yesterday I got stopped out of CCL. Today I got stopped out of Rocket Lab. It's likely that I get stopped out of CCJ. It's likely that I'm going to stop out of SYM, right? So now all of a sudden in 2 days, I get stopped out of 4 longs, okay? Any new longs that I've taken, Rocket Lab hasn't really worked all that great. SYM, although I did a nice job trimming into that pop, I'm going to give back half my gains and then no more traction. MP went up for a few days off of the 50-day, but obviously, kind of a nasty down day yesterday, plus the gap down today, almost $4. So that I'm not gaining tons of traction on, even though I'm in from 64 off of the 50 simple moving average. CCJ, kind of a nasty down day, plus a $3 gap down today. They're making that difficult. So the reality is I'm not gaining traction on new longs, right? I'm watching my old position stop me out. And then I'm also gaining traction on the short side. So there's a few things that make me go, okay, I'm losing. You're effectively spinning tires if you were long only, right? So if you're long only, you're losing traction on your old longs, and you're losing traction, and you're not gaining traction on new longs. So that's it. That's the first kind of caution sign, right? Outside of like Tesla going to hit a new closing high yesterday, we are now gapping down 10 points, right? So that's not the best feeling. So while all that's going on, I'm gaining traction on the short side. I'm not saying that that's raising my antennas. I'm just saying that when I'm losing traction on the long side and I'm gaining traction on the short side, naturally, instinctively, I want to go and see if I can potentially put on another short. Now, are we a little late to short, right? We've been going down for the last 3 days. I thought yesterday was a really nice opportunity to put some shorts on, and 3 out of 3 worked. Meanwhile, I got stopped out of a long. I talked about this in last night's watch list video and even the day before. And I'm sure Jesse probably heard me say on that video, make sure you're using progressive exposure. It's the thing that will keep you out of harm's way and stop you from digging a bigger hole or giving back gains that you've made. But it's starting to seem like this is where you're gaining traction. That's the side of the market you should focus on. Now, that's not to say just randomly throw out your longs, but if you're going to lose traction on your current longs and not gain traction on new longs, I shouldn't just keep plowing into the long side. I will get long eventually, but on what? It'll be what's showing most relative strength while the market's correcting. And when I buy it is when the market's actually going up or bouncing off of its own key moving average at maybe the 20 simple, right? Something like that. But for now, I'm just going to enjoy the traction that I'm getting on the short side. That should hopefully kind of stop the bleeding in the portfolio because I'm actually making money there. And even the most recent longs that I've had, MP was I untrimmed basically, CCJ a small trim, and SYM a small trim. So I at least did a nice job there of trimming some off, and same thing with Oklo. But it just kind of seems like the tires are spinning, and I don't want to get defensive just for the sake of getting defensive or negative. The market is still in an uptrend, and a damn big one. So, until something more meaningful changes, I think, we should all just enjoy this little pullback. The market really needed it, and it'll set things up again, potentially. But in the meantime, was there an opportunity to play the short side? Absolutely. So that's just kind of how my thinking is right now. I don't want to get overly defensive for nothing, especially when the opportunity to short was a few days ago. Even like on an MSTR, the short on an MSTR was, 5 days ago, right? And then now here we are, breaking down $315, right? Like the lowest, we're going to open up in like the lowest part of this entire formation. So, not chasing price. My thoughts on LEU. $257. I mean, it's down to the 10-day. As long as you hold the 10-day, I think you're all right. The last thing you really, if it were me and I had bought this thing 208, the last thing I really want to do is watch this thing go down to 232 after being at 312, right? So I'm hoping that you trim some into this push, and then now you can comfortably hold this pullback. My approach to the market is the same as it always is. I'm looking to manage the positions that I have open. I'm making sure that I, trim into strength. That's the important part. Make sure I've trimmed into strength, and then just manage what I already have open, right? And then if if I'm going to, like I said, lose traction on the long side, am I trying, to use progressive? Same way I try to get all my money to work on the long side is the same way I would try to get all my money to work on the short side, if that's the side of the market that's being rewarded, right? If I'm saying to myself, hey, the market is starting to pull back, it's starting to undergo a correction, and I'm gaining traction on the long side, I keep peppering that side of the market if I continue to get traction there. Okay, this is a great question, and it actually has a very simple answer. How do you decide when a swing position or when to hold it as a position trade? Okay, so they all start out as swing trades. If the stock acts well in a good market and just first rides the 10 and 20 simple moving average, and then the 50 begins to catch up to the higher lows that have been built, it becomes a position trade using the 50 simple moving average. And I'll give you an example. ARK. Okay. So I bought ARK over 3 months ago on 6.6, right? And you could see that every time the stock pulled back, right, it kept building higher lows, right? Another pullback there. And this stock just kept building higher lows. Every time it pulled back, kept holding the 10, right? And then eventually I was like, okay, you get a little bit more extended and the 50 begins to pass that area. When this gets up here, the 50 simple moving average is creeping up to these higher lows, right? And my thinking just becomes, I want to, this position has earned the right to become a position trade because of its own price action. So like even this down day that instantly got bought right back up to this left side peak now becomes my new stop. And what does it do from there? It pulls back again, but it builds a higher low, right? And so then all of a sudden, as you're sitting through it, it then pulls back again. But what does it do? It builds a higher low. So the individual stock itself, and remember, moving averages are just lagging price. Ultimately, price structure is far more important. And so long as a chart is building clean technical price structure, I was able to hold through this entire consolidation. And mind you, I added some on 9.9. I ended up cutting it on FOMC day because of this, kind of nasty move down. And I thought, okay, maybe the market's about to undergo a correction now. And I didn't want to give back those gains. So I just got rid of my most recent ads. And obviously at the time, I damn near bottom ticked it. And it ended up wicking up to close at the end of the day, which is fine. I still have my 59 cost basis, but now all of a sudden this thing broke this flat pivot again, pushed out, and all of a sudden, these higher lows, they're way in the past, and now the 50 simple moving average is well above that spot too. And if this thing can just consolidate for another 3 weeks and then the market begins to turn up again, sooner rather than later, this 200 simple moving average is going to catch up to this $75 area. And eventually I'll be using the 200 simple moving average on something like ARK. That's the hope, right? But for now, I'm just using the 50 simple and just letting it work. And, I've got $7 of wiggle room on my ARK position. If you get stopped out, you get stopped out. But so long as it just continues, if it comes down, builds a series of higher lows, builds a whole new base, in the meantime, the 200 is catching up, I'll just sit there. So really, I'm always a swing trader. I'm a position trader if the stock allows me to be. How do you plan a short trade on an unwind of speculative names? You attempted IONQ yesterday, but the intraday volatility stopped me out on the push to high day. So very simply, I was using $76 as my stop. So try to get yourself positioned as best as you can intraday, size properly. And even like with an IRIN, I knew when I was shorting at 48 that I may have not nailed the top. But the way the daily looked, how far extended we were, I knew that I would be comfortable watching it go all the way to 50 before I'd stop out, knowing I could take a $2 loss, right? So I was sized accordingly for that. And then as soon as I added, right, all of a sudden, as soon as I added more, I kind of started mentally tightening up my stop. And then obviously, when the market was closed, it went to $50 overnight, but literally tapped 50 to the cent And then I couldn't get out of it. I just kind of had to take my medicine. And then overnight, market begins to roll over a little bit. And, there goes Iron with the rest of the gang. So, yeah, it just becomes a matter of position sizing and kind of, measuring extension from the 50 and also kind of taking into account what the rest of the market was doing, right? Like Nvidia was pulling back the day, like the day that Nvidia had that open AI news. And then all of a sudden, the very next day, you start to give back all of those gains. That's not bullish. I expected Nvidia to continue over a new all-time high, but it gave back most of those gains. And then yesterday, it was pulling back even more. That's not good. So you kind of start to realize, like, hey, you know what? The market is needing a little bit of a break here, and you can see it in the action of the stocks. You can see it in Amazon the day before, right? Amazon losing the 50-day in a big way. Well, guys, if Amazon's losing the 50 in a big way and Google's pulling back and Nvidia's giving back some open gains and Meta's acting a little bit heavier, right? If you could just take a peek at Meta, eventually stocks that are wildly extended, right, are going to start to crack. And that could also be seen in a name like BE, right? BE the day before was down like 8%. And then all of a sudden yesterday, it's down like, I don't know, it feels like 10 or 12 or something like that, right? So it's like you start to see this action the day before and then this action overnight. All of a sudden I'm going, okay, this was one of those extended speculative names. Not to say that BE, can't be legit or isn't legit. It's just that it is a bit speculative. You go from 20 to 80, that's a little effing nuts, right? 25 to 80. So it's the same thing with Iron, or it's the same thing with Oklo. It's the same thing with IONQ. It's the same thing with Rigetti. At some point, even SNDK, you kind of get to a point where you get so extended from the 50-day, the risk reward is just off the table. Market participants see that, the stocks that quote unquote can carry the market are starting to falter a little bit. And then you can see it in a stock like Reddit a few days ago, down 8%, right? You could see it in an A lab with a bunch of these little unfilled gaps on the way down and then just consistently coming down. Now, all of a sudden you're at 189. You're not too far from the 50-day. That starts to hurt, and market participants are hitting the exit. You have to take that into account when you do your homework every single night and scan the market. So, make sense of that, right? Like, what exactly is the market telling you when you scan the market? So, yeah, good to think about. But you normally pick up those subtle clues when you do your homework at night. And yesterday I took no longs. I cut one long and I took 3 shorts. Now, a little bit lucky on the timing for sure. Could easily be some luck there too. Hold or let it go if you entered on the recent base. I mean, trim and trail, right? That's the best answer I got for you. I can't tell you to hold or sell. That doesn't, that's not going to do you any good. If you bought this like, 70 something bucks, you trim some into the strength and then you just trail. It's all you can do, right? The rest is, you just got to sit there. How do I feel about MSTR short? I love it. This thing has been weak since November, right? Like if you haven't looked at MSTR yet and you haven't like really zoomed out on this thing, you'll notice this price action here, right? You get this big parabolic move, right? You get months of lagging price action. Eventually you break down under the 200 and eventually you go into stage 4 downtrend. You get this big parabolic move. You get months of lagging price action. Eventually you get under the 200 and then you break down into a stage 4 downtrend. Like we've seen this movie with MSTR already. How do I feel about my MSTR short? I absolutely love it. I'm short one of the worst lagging stocks in the entire market below the 200 simple moving average, period. Right? How do I feel about it? I'm making plenty of money. I feel pretty good about it. I see no reason why I would feel bad at all. I mean, it looks great if you're a short. It also looks great if I do a handstand, right? And you flip the chart upside down. It looks great, man. If you were bullish, this chart would look great. If you were a bull, this chart would look great flipped upside down, right? You would be like, okay, coming out of a stage 1 base, establishing itself above the 200, looks like it's trying to start pushing up. Yeah, that's what that would look like. MSTR looks absolutely god awful, which means I like it that much more. If you're looking into ETFs, it seems that all of them are extended prone for correction. That's not true. The XLE looks pretty good, right? And we're just getting above the 200 now. All right, but do you really want to be long oil and gas? That's the question you have to ask yourself. How to learn shorting? Probably no path in mind. What is a good setup to start with? Earnings gap down, right? The same way you get like an EP setup to the upside, learn an earnings gap down to the downside, right? I remember this one clear as day. Bless you, my love. I remember this one to a T. Was it Okta? Right? What happens here? And this is while the market is ripping and raging, right? We're talking the market just bottomed in April. And here you go in May, you get an earnings move. Yo, it's going up. It's going up. The market's healthy. That's all great. Gap down on earnings. You get the high volume close. You're looking at the close 105.22. You get a really clean bear flag. You get a break from that bear flag on 6-9 and sayonara sucker, right? Again, hasn't made a huge move. No, but it's been showing relative strength. So if you want to short names with weakness, right? Shake Shack, same thing. Right? Look at this. All of a sudden, this thing looks pretty good. And then it breaks down on earnings. And there you go. You just got to find a way to get your butt in. But this thing has been in a downtrend the entire time, despite the market going up. And you look at other stocks in the group and you say, okay, Shake Shack, they're a food stock. Okay, let's look at the other ones. How does Chipotle look? Horrible. How does Kava look? Pretty damn terrible. How does Eat look? Pretty damn terrible. This looks like a stage about to go into a big stage 4 downtrend. You've already made a big move up on this, right? And then all of a sudden you start to get into a stage 3 top and you start to break down, right? And this looks like it could look a little like this Sprouts Farmers Market where you make a big move up, you build a base, you start to break below the 200, and then all of a sudden, see you later, sucker, below the 200. So start with earnings gap downs. I think those are the absolute easiest. And then when you get an earnings pickup in volume, and then you get a rejection of a key moving average, learn a 620 setup at that key moving average. So like what happened on 8-4 at this key moving average is the same thing you would see here on MSTR a few days ago. And so we'll just look at it again so you can kind of look. This is what it'll look like. It'll be running up, then it'll trigger a 620 setup right there. And then all of a sudden, it'll start to break your 20 simple moving average on the daily or reject it. And then you could short it, stop at high of day, and you're done. And then just let it work. And then all of a sudden, you're in a name like Sprouts right here, right? 159. And now you're at 115. Slow, but you get the picture. You can do it with faster names too. Nice job, CG. Yeah, take profits into strength, let them work against their ascending moving averages, and then that's it. Well, you could always learn shorting in the room. China Force, you're always welcome there. Yeah, Lorena, that's you paying attention. Yeah, you'll notice the change. It's very subtle at first. and then there's a little bit more evidence of it, and then a little bit more evidence of it, and then your longs will get stopped out. And if you short, you'll gain traction pretty easily on the short side because you're operating within a market that's going down. So yeah, it starts to that's how it starts to work. IONQ is fairly simple. IONQ was just looking at this thing starting to break down in pre-market. So I kind of noticed this high that it put in the morning, right? And I was just starting to get a little feeler short as we were breaking down, just put on a little bit. And then as soon as we kind of broke that pre-market low, I added a little piece. And then as soon as we did the 5-minute opening range break low, I put on a little piece, and my stop was $76. Just that simple. See this high right here? You see that white line? That's prior day high, which is effectively that pre-market high. My stop, even in this morning push, you had that push up to that pre-market high and you rejected. I was effectively short in here. I was short some more in here, and I was short some more right there with my stop at prior day high. Very simple. And yes, it was very uncomfortable in there until the close. That's it. Nothing more to it. And the 620 setup on the 5-minute had already taken place. And it took place too early in the morning for me to do anything about it, right? It took place right there, plus far too little liquidity for me to get the shares I needed. SNDK, also very easy. So SNDK, I was eyeballing this thing as a move with MU. I knew that they were kind of moving in unison, right? MU, WDC, STX, SNDK. And I shorted into this push, right? Against, and you see how this thing rejected going green on the day. And then I shorted a little bit more into the weakness, and that was it. I was just looking for a nice strong push into green, and I would have been out of here. And you notice how really no 5-minute bars closed above, green minus this one. But even this close was still lower than the prior 5-minute high. So I was just sitting there. And part of the reason I was just sitting there was because MU was fading. And literally it just took a matter of 10 minutes of patience. And all of a sudden, this thing is just rolling over back under red. And then it would not reclaim green on the day, right? It refused to go green. And then you'll notice that there was a washout here, and it started, more so in the middle of the day, call it by 9:55, 10 a.m. And MU was doing something very similar at the time, but it was just taking place at a lower price range, right? So while SNDK was consolidating, so was this one. And then as soon as this one started to break down, SNDK was following. So that was it. It was just a play on these are far too extended and just having a key level and having proper sizing, right? Everybody wants to absolutely nail their average. And part of the reason they care to do that so much is because their position sizing is too big. When you position size properly, 10 cents, 20 cents, 50 cents, depending on how expensive the stock is, it's not the make or break. It's about showing up on the right day. That's way more important. Yeah, probably a matter of buying power, I would think. How do I manage Tesla here? Tesla's not doing anything wrong, right? The 5-day on Tesla is still, $429, so lower. And I like to see the 10-day catch up, so 416. I mean, I've got some wiggle room on this. I want to see the market break down a little bit, and then this one can just go sideways for a while, like another week or two. No, I won't be using the 5-day. I'll be using the 10-day for now to lighten up. And even really the 10-day, as long as we can just build some higher lows, hopefully in a few days, I'll be using the 20-day without having to trim any. A little bit of weakness there recently in Microsoft. It's just too slow to want to short. CoreWeave just got OpenAI news. Yeah, I could care less, honestly. There's no real setup here. I talked about this in last night's watch list video that I would keep it on watch, but I just don't see a setup clean enough to take. Thoughts on Autodesk? I talked about it. It looks fine, just a little slow. Well, I usually want to use the 10 and the 20, but if the stock pulls back and then finds support at the 10 and then bounces, I then use price structure more than anything. Right. So then it can pull back, after it pops back up, and then I'll use that higher low. And at that point, the 20 has caught up. So, yeah, you'll have access to everything. There's not like more rooms within the Discord. It's just the whole room. So, and there's like educational channels in there. I'll post like my daily watch list video. I'm on live stream all day, basically. Yeah, the 620 setup is awesome, John. Very simple setup, good for managing risk, because like once the smaller time frame turns, right, but you're using the daily as like to find your key levels, you've already got a defined risk on that 5-minute chart, right? So if like you're looking to short something that has gone up and then starts to roll over, you've got that high as your stop. If you're looking at a pullback and it starts to turn back around, you've got that low as your stop. So it's really nice because you've got a key defined area of where your risk is. Yeah, I have a channel for it in the room. I learned it from Gil Morales. So he used to manage money for Bill O'Neill. And it's just one of the entry tactics that I'll use. A 5-minute opening range break is another. A break of prior day high is another. Break of a range is another. A high volume close setup is another. I mean, you got to have a few entry tactics, but I don't have to go too crazy with it. It's just another entry tactic. The problem is like people learn about it and then they think like all of a sudden like every 5-minute ebb and flow is a reason to trim or a reason to get in or a reason to buy more. And that's totally wrong. Yeah, Gabo, that's very good. Yeah, you had shorts on watch yesterday. Yeah, good. Looking at the action in Reddit, BE, and A Lab. Yeah, you are looking at the right things, dude. Yep. Normally, when you kind of come from that day trading world, you make money on the smaller time frame, and so you naturally oversize things. When you're a swing trader, it's only time that pays you. It's not position sizing. So like you have to be patient with your size. And I take so many small greens, so many small little red, and so many flat trades. I'm wrong 65% of the time, but it's the one Tesla trade, it's the one Oklo trade. Those are the trades that make your year. It's the Baba trade at the beginning of my year, right? It's the handful of trades that make your year. Everything else is is flat, right? Or small red, small green. Like no effect to the portfolio at all, which is fine. They don't affect me one way or the other. Yep, I did start trading small caps. If I knew what I knew now and I could go back, I would be a swing trader every day. Even when I was trading small caps, like, okay, I nailed my AMC short, or I'm sorry, my AMC long at $2.17. I had 70,000 shares back then when GME was going. And if I was a swing trader back then, I made $7,000 that day on AMC long. And had I just held it for 5 trading days, it would have been my first $1 million swing. So I remember 20,000 shares of SRPT or SPRT, and it was moving, I think, like as a crypto name back then. And I also left another $1 million trade on the table. I can go back to 2020 and 2021 and remember how many multiple $1 million trades I left on the table. And it was because of environment, right? It wasn't because I was some genius. It was the environment. So oftentimes, you think you're doing something super smart by taking your money off the table, but oftentimes just letting things work in a really good environment is the best way to go. What would I recommend for a small $2,500 account? Learn proper position sizing, learn to, buy leading stocks and leading groups from clean technical setups, and learn to use progressive exposure. So I wouldn't tell you anything differently than someone with a 25K account or a 250K account or a $2.5 million account. The only thing different that I would tell you is you don't need to own as many names, and you could probably concentrate a little bit harder on like $500 positions versus, 5,000 or 50,000 or 500,000, right? It just depends your portfolio size, but I wouldn't tell you anything different. I would teach you the exact same thing, because at the end of the day, you have to do the right thing to make this career, have some longevity. Can I elaborate on CLF? Steel name, Cleveland Cliffs, if I'm not. Yeah, it looks nice and tight here. It doesn't actually look that bad. Not that bad. Well, if it can get over 12 bucks, it'd be pretty interesting. Guys, I got to get running. Sorry for showing up about 5 minutes late today, but we stayed a few extra minutes. Hopefully you guys trade them well. Don't do anything crazy out there. Let the market settle for, a few minutes and manage your open positions as you're supposed to. I will see you guys all. Oh, actually, I take that back. Oh, I'll be on for pre-market prep tomorrow. I take that back. I will. But I am traveling to Michigan at noon. So we are going to Arcadia Bluffs. Some good golf this weekend. Hopefully you guys have a great trading day, and I will see you guys bright and early tomorrow. Cheers.